Disclaimer.
Picture this, December 19th, 2025. While most Americans were shopping for holiday gifts, silver quietly hit $67.45 per ounce, an all-time record that shattered every prediction on Wall Street. That's a 130% gain in a single year, the strongest annual surge since 1979 when inflation was tearing our economy apart. But here's what should grab your attention. This wasn't just another commodity rally. On that same day, Russia became the first major nation this century to publicly allocate $535 million of government funds specifically for silver reserves. Not gold, silver. Think about that for a moment. When was the last time you heard of a country stockpiling the metal in your smartphone instead of bars in a vault? Meanwhile, across the Pacific, China's silver inventories collapsed to record lows. The Shanghai Futures Exchange warehouses, once brimming with millions of ounces, now sit nearly empty as Chinese industries scramble to secure whatever physical metal they can find. And in between these two powers, India quietly holds centuries of accumulated silver wealth while expanding its technological manufacturing capacity at breakneck speed. Three nations, one metal. And America is dangerously behind, in a race most of us don't even know is happening. Here's where it gets interesting. You probably think of silver as jewelry or maybe old coins your grandfather collected, but walk into any data center powering the AI systems you use every day, and you'll find silver in every server, every circuit board, every connection point. According to industry analysis, AI demand for silver has exploded 5,252% since 2000. That's not a typo. 5,200% growth while our known reserves are running dry. Let me put this in perspective. Right now, as you're watching this, the entire global supply of readily accessible silver sits at roughly 20 years worth of reserves at current consumption rates. 20 years sounds reasonable until you realize we're not consuming silver at current rates. We're accelerating dramatically. Pop quiz, how much silver does it take to build an electric vehicle compared to a traditional gas-powered car? The answer is 67 to 79% more. Every single EV rolling off assembly lines requires significantly more silver than the car it's replacing. Now multiply that by the tens of millions of EVs governments worldwide have mandated by 2030 and 2035. California alone has mandated all new car sales be zero emission by 2035. Millions of vehicles requiring substantially more silver than our current fleet. But the real crisis isn't in our driveways, it's on our rooftops and in our deserts. Solar panels consume silver at staggering rates. Each panel contains silver-based contacts conducting electricity, and while the amount per panel seems small, the scale of global solar deployment is massive. Current projections from the Solar Energy Industries Association show solar installations could devour 85 to 90% of all known recoverable silver reserves by 2050. Not annual production, everything left in the ground we can economically extract. The math gets brutal fast. We're currently mining about 813 million ounces of silver annually across the entire planet. Meanwhile, global industrial demand sits at 1.21 billion ounces per year. You don't need an economics degree to see the problem. We are consuming roughly 400 million more ounces every year than we're pulling from the earth. This is our fifth consecutive year of deficits. In 2025 alone, according to the Silver Institute, we burned through 115 to 120 million more ounces than miners produced. Stack those deficits year after year, and we've created a cumulative shortage of 700 million ounces since 2021. That's nearly an entire year of global production simply gone, evaporated into products that will never return that silver to the market. Have you noticed your electronics getting more expensive? Your solar installation quotes creeping higher? This is why. The supply crunch isn't coming. It's already here, hiding in plain sight, and the price increases manufacturers are quietly passing down to consumers like you and me. Now here's what Wall Street doesn't want you to understand. For decades, the paper-silver market operated smoothly through COMEX, the commodity exchange, where traders buy and sell contracts representing physical metal they may never touch. It's been stable and predictable for industrial buyers and investors alike, until October 2025, when something unprecedented happened. The COMEX market entered backwardation, meaning nearby contracts became more expensive than future contracts. In plain English, people are desperate for physical silver right now, not promises of silver 6 months from now. The paper market is screaming that the emperor has no clothes. The deliverable inventory in COMEX warehouses has crashed to just 23.1 million ounces, the lowest level in 15 years. A single large industrial buyer or medium-sized nation could theoretically purchase the entire deliverable supply and demand physical delivery. The whole paper trading system stands on the thinnest foundation we've seen since the financial crisis. What does this mean for you? Every time you upgrade your phone or install smart devices, you're competing for silver with solar companies, EV manufacturers, defense contractors, and sovereign nations, buying in bulk with billions in capital, while you pay retail prices reflecting this hidden shortage. Your retirement account might hold tech companies or green energy funds facing existential supply chain risks. If silver hits 100 per ounce, their manufacturing costs explode while competitors with secured silver supplies maintain profitability. But while our financial markets teeter, Russia, China, and India aren't trading paper, they're accumulating physical metal with surgical precision. Russia's move is particularly calculated. Their 2025-2027 federal budget explicitly earmarks 51.5 billion rubles for silver purchases, and they produce 38.5 million ounces annually from their own mines. They're creating a closed loop of domestic production and sovereign reserves, while the West remains dependent on global supply chains we don't control. This is resource warfare disguised as fiscal policy. China's strategy is even more devastating for American interests. They control 80% of global solar panel manufacturing, requiring roughly 232 million ounces of silver annually just to maintain current production. Yet their exchange inventories have plunged to record lows, forcing panic buying on international markets. Think about this leverage. China manufactures the solar panels. Our green energy transition depends on while securing the silver those panels require. When California mandates solar installations or Texas builds massive solar farms, they're all dependent on Chinese manufacturing controlling its own silver supply chain. India plays a different game, but equally effective. Centuries of cultural affinity for silver have resulted in estimated holdings of 41,000 metric tons, more than most nations will mine in the next decade. As India expands electronics and renewable manufacturing under Make in India initiatives, they're sitting on domestic reserves that could feed their industries without relying on vulnerable global supply chains. The question you should be asking right now is simple. What does America have? We have the world's most sophisticated military that depends on silver-based electronics in every weapon system. We have ambitious climate goals requiring massive solar deployment that consumes silver at unprecedented rates. We have a booming electric vehicle market that needs silver to function. And we have exactly zero strategic silver reserves while importing most of what our industries consume. According to BNP Paribas, one of the world's largest banks, silver could hit 100 per ounce by the end of 2026. But that projection assumes business as usual. No supply shocks, no escalating geopolitical competition, no sovereign buying waves. What happens when business is anything but usual? The gold to silver ratio recently spiked above 100, meaning it took more than 100 ounces of silver to buy a single ounce of gold. Historically, this ratio normalizes between 50 and 60. If we're using gold as a monetary anchor and silver as an industrial necessity, current prices are telling us that silver is catastrophically undervalued relative to its actual strategic importance. Here's the scenario that should terrify every American who cares about our technological independence. Imagine it's 2027 and silver has spiked to 150 per ounce because Russia's reserve purchases triggered a sovereign buying wave across BRICS nations. Brazil, India, China, and South Africa all begin accumulating silver as a strategic resource, and suddenly the physical market can't supply both sovereign buyers and industrial demand. American manufacturers building AI data centers can't secure silver at any price. Solar installers face contracts they can't fulfill because the silver they need is locked in foreign reserves. EV manufacturers watch supply chains collapse while Chinese competitors with secured silver capture our domestic market. Defense contractors struggle to deliver weapon systems because silver-based electronics have become scarce and prohibitively expensive. The real kicker? We did this to ourselves. We treated silver as just another tradable commodity instead of recognizing it as the strategic resource it truly is, the metallic backbone of every technology defining modern civilization. From 5G networks connecting our cities to touch screens in our pockets, from satellites securing our communications to medical equipment in our hospitals, silver is woven into American technological supremacy. And while we traded paper contracts and focused on financial engineering, three nations quietly positioned themselves to control the physical supply. They didn't announce intentions at press conferences. They simply acted with patient determination, while America remained distracted by quarterly earnings and stock fluctuations. This isn't speculation. This is supply and demand math, playing out in real time, while most Americans remain unaware that a critical resource war is happening beneath our economy is surface. The deficit numbers don't lie. The inventory levels don't lie. The sovereign buying patterns don't lie. We're not just late to this fight, we're in danger of losing before we realize the battle has begun. So how do we know this isn't just market speculation or financial fear-mongering? Because Russia literally wrote their silver strategy into official government budget documents. When Russia published their federal budget for 2025 through 2027, buried in the fiscal allocations was a line item that should have made headlines: 51.5 billion rubles explicitly earmarked for silver purchases. At current exchange rates, that's approximately $535 million dedicated solely to accumulating physical silver reserves. This is not a mining subsidy. This is the Russian government directly buying and stockpiling silver as a strategic national asset. Russia is the first major central bank this century to publicly allocate substantial government funds specifically for silver reserves, not gold, which central banks have hoarded for centuries. Silver, the metal that powers smartphones, enables solar energy, and forms the foundation of modern electronics. But here's what makes Russia's position even stronger. They produce approximately 38.5 million ounces of silver annually from domestic mines. They're creating a completely closed loop. Russian mines extract the silver, Russian refineries process it, and the Russian government stockpiles it in sovereign reserves. No exposure to COMEX price manipulation, no dependence on shipping routes, no reliance on foreign suppliers. When the global silver shortage intensifies, Russia won't be competing with the rest of the world for scarce supplies. Now let's talk about China, because their silver strategy is even more devastating to American interests. China currently controls 80% of global solar panel manufacturing. When an American homeowner installs solar panels, when a Texas utility builds a solar farm, when California mandates renewable energy, they're almost certainly buying Chinese manufactured panels. And every single panel requires silver for the conductive contacts that make them function. At current production levels, Chinese solar manufacturing consumes approximately 232 million ounces of silver annually, roughly 30% of total global production. But here's where China's strategy gets truly brilliant. While they dominate solar manufacturing that devours silver, their Shanghai Futures Exchange inventories plunge to record lows throughout 2025. Industrial buyers in China are in panic buying mode, desperately trying to secure physical silver to keep manufacturing lines running. Yet according to metals industry analysts, China holds approximately 41,000 metric tons of silver in various reserves, both government-held and privately accumulated. This is economic warfare disguised as industrial policy. China controls both the manufacturing that consumes silver and substantial reserves of the metal itself. They can manipulate global markets by releasing or withholding supply, while simultaneously dominating the industries that create demand. American solar companies, EV manufacturers, and tech firms are caught in a vice, dependent on Chinese manufacturing while competing for silver supplies that China increasingly controls. India presents a different model, but equally challenging for American interests. Indian families have traditionally held silver as a store of value for centuries, accumulating it through jewelry, coins, and temple holdings. Current estimates suggest India holds roughly 41,000 metric tons throughout the country. The cultural silver wealth is now intersecting with India's Make in India manufacturing initiative. As India expands electronics manufacturing and renewable energy production, they have access to domestic silver reserves that can feed their growing industries without relying on international markets where prices are spiking. An Indian manufacturer can potentially source silver from domestic refineries, while American competitors bid against Chinese buyers on increasingly expensive global markets. The common thread connecting Russia, China, and India, they've all secured access to physical silver through different strategies: domestic production, industrial control, or cultural accumulation. Meanwhile, America has done essentially nothing. We have zero strategic silver reserves. The U.S. government maintains strategic stockpiles for oil, rare earth elements, and various critical materials. But silver, despite being essential for our military technology, renewable energy transition, and electronics industry, has no government stockpile whatsoever. We import the majority of our silver consumption, dependent on global markets we don't control and supply chains vulnerable to disruption. The financial markets are starting to price in this crisis. BNP Paribas has issued a forecast projecting silver will hit 100 per ounce by the end of 2026, a 48% increase from current levels based on fundamental supply-demand analysis showing physical shortages are inevitable. Major financial institutions are quietly revising their silver forecasts upward as the reality of structural deficits becomes undeniable. Here's another critical data point. The gold-to-silver ratio recently spiked above 100, meaning it took more than 100 ounces of silver to purchase a single ounce of gold. Historically, this ratio normalizes between 50 and 60. Gold serves primarily as a monetary asset, while silver functions as an indispensable industrial material in technologies defining the 21st century. Silver should be gaining value relative to gold as industrial demand explodes, yet the ratio suggests silver is catastrophically undervalued. This disconnect can't persist. Either gold prices collapse or silver prices surge to restore historical balance. Consider what's driving industrial demand. AI data centers are proliferating across the country, each packed with servers containing silver in every circuit board and connection point. According to technology industry research, AI-related silver demand has surged 5,252% since 2000, and we're still in the early stages of AI deployment. Layer on 5G network infrastructure. Every tower and cell installation requires silver for superior electrical conductivity, representing years of sustained consumption far exceeding previous cellular generations. Electric vehicles are not just using more silver than gas cars. They're using it in applications where there are no viable substitutes. Battery management systems, charging infrastructure, and regenerative braking all depend on silver's unique combination of electrical conductivity and reliability. And solar energy deployment might be the largest single driver of future silver demand, with no economically viable alternative material that can match silver's performance in converting sunlight to electricity. The proof is overwhelming. Russia has documented their silver purchases in official budget allocations. China's control over solar manufacturing and strategic reserves are matters of public record. India's cultural silver wealth is well established. Meanwhile, American dependence on imported silver is undeniable. Our lack of strategic reserves is policy failure, and the industrial demand explosion is visible in every technology trend shaping our future. This isn't theory. This is documented reality playing out in budget documents, trade statistics, inventory levels, and market prices. 3 nations have positioned themselves to control a resource America desperately needs but has failed to secure. Now let's do the math that makes this crisis inevitable, because the numbers are so stark that there's no interpretation required, just simple arithmetic that leads to an unavoidable conclusion. Global silver demand currently sits at approximately 1.21 billion ounces per year. That's what the world's industries, investors, and manufacturers collectively consume annually across all applications. Solar panels, electronics, EVs, jewelry, coins, industrial processes, everything. Meanwhile, global silver mining production delivers roughly 813 million ounces per year. That's every mine operating worldwide at current capacity, extracting every economically viable ounce they can pull from the ground. Subtract production from demand, and you get a deficit of approximately 400 million ounces every single year. We're not talking about a temporary supply disruption or a short-term imbalance. This is a structural deficit that has persisted and grown year after year. According to the Silver Institute, we're now in our 5th consecutive year of deficits. And 2025 alone saw a shortage of 115 to 120 million ounces. Stack those annual deficits together, and the cumulative shortage since 2021 totals roughly 700 million ounces. That's nearly an entire year of global production that has simply vanished into products and applications where it's essentially gone forever. Silver in a solar panel on your roof isn't coming back. Silver in the circuit board of your smartphone isn't being recycled when you upgrade. Silver in an EV battery system stays there for the vehicle's lifetime. Unlike gold, which mostly sits in vaults and can be mobilized when needed, industrial silver consumption is a one-way street. Here's where the timeline becomes truly frightening. Current estimates suggest we have approximately 3.1 million metric tons of economically recoverable silver reserves remaining in the ground worldwide. Converting that to ounces, that's roughly 100 million ounces of silver we can realistically extract with existing technology and at prices that make economic sense. At our current consumption rate, with demand exceeding supply by 400 million ounces annually, we're heading toward physical exhaustion of economically recoverable silver reserves by approximately 2045. That's just over 20 years from now. But here's the critical point. Demand isn't staying flat, it's accelerating. AI deployment is expanding exponentially, not linearly. Every tech company is racing to build more data centers, more AI infrastructure, more machine learning systems. Solar energy installations are on track to double or triple as nations pursue climate commitments and renewable mandates. EV production is projected to grow dramatically as gasoline vehicle sales phase out across major markets. Each of these trends means silver consumption will increase substantially from current levels. If demand doubles over the next decade, which is entirely plausible given AI and solar growth trajectories, that 2045 timeline collapses. We could be looking at critical physical shortages emerging as early as the 2030s, possibly sooner, if sovereign buying accelerates the drawdown of available supplies. Think about what that means in practical terms. Imagine trying to build America's renewable energy infrastructure when there's literally not enough silver available at any price to manufacture the solar panels at the scale we need. Picture defense contractors unable to deliver weapon systems because the silver required for sophisticated electronics has been locked up by foreign powers. Consider tech companies unable to expand AI infrastructure because the data centers they're building can't be equipped with the silver-based components they require. This isn't distant future speculation. The crisis timeline is measured in years, not decades. And the price signals are already flashing red. BNP Paribas forecast $100 per ounce by December 2026. JP Morgan projects 58, Citibank estimates 72. These major financial institutions are working from different models and assumptions, but they're all pointing in the same direction. Silver prices must rise, and rise substantially, to reflect the physical reality of supply constraints. But here's what should really grab your attention. Those forecasts assume relatively orderly market conditions, normal industrial demand growth, and no major disruptions to the current system. What happens if those assumptions break down? What if Russia's public silver purchases trigger a broader response? Imagine it's the second quarter of 2026 and Brazil announces they're following Russia's lead by allocating government funds to build silver reserves. Then South Africa, sitting on some of the world's largest silver mining capacity, decides to keep a portion of domestic production for sovereign reserves rather than exporting it. India quietly begins purchasing on international markets to supplement their existing holdings. Suddenly, you have multiple BRICS nations competing for physical silver at the same time. American and European manufacturers are desperately trying to secure supplies for industrial use. The COMEX paper market, already showing strain with backwardation and depleted inventories, faces a flood of delivery demands it can't possibly fulfill with physical metal. In that scenario, the conservative forecasts go out the window. Silver could spike to $150, $200 or higher as the gap between paper promises and physical availability becomes undeniable. The entire commodities trading system that has governed silver prices for decades would face a crisis of confidence where market participants demand physical delivery rather than accepting cash settlements. You might be thinking this sounds extreme, but consider what we've already seen. Russia has already made their move. The budget allocation is public record. China has already demonstrated they're willing to aggressively purchase silver while maintaining strategic reserves. India already holds massive physical silver accumulated over centuries. The framework for a sovereign buying wave is already in place. It just needs a catalyst to go from potential to reality. And when that happens, whoever controls the physical silver controls the future of technology-dependent economies. Let's be very specific about what's at stake for America. China holds an estimated 41,000 metric tons of silver in various reserves, while dominating 80% of solar panel manufacturing. If they choose to prioritize domestic use over exports, American renewable energy targets become impossible to achieve. Our climate commitments, our green energy transition, our solar deployment plans all depend on Chinese manufacturing, fueled by silver we're competing for on global markets. Russia produces 38.5 million ounces annually from domestic sources and is actively building sovereign reserves. They are insulated from global market chaos and positioned to support their domestic industries, while American companies bid against each other for shrinking available supplies. India sits on 41,000 metric tons of accumulated wealth while expanding manufacturing under Make in India initiatives. They can leverage centuries of cultural silver accumulation to fuel industrial growth without depending on imports. Meanwhile, the United States has zero strategic silver reserves, imports most of our consumption, and maintains no government program to secure this critical resource. We're building our entire technological future, AI infrastructure, renewable energy systems, electric vehicle production, defense capabilities, on a foundation we don't control and increasingly can't access. Here's the final calculation you need to understand. Whoever controls silver in 2026 and 2027 does not just control a commodity. They control leverage over America, its technological capabilities, our renewable energy transition, our manufacturing competitiveness, and our national security infrastructure. Every advanced weapon system our military depends on requires silver-based electronics. Every data center powering American AI companies needs silver components. Every solar farm we build to meet climate targets consumes silver we're fighting to secure. The nations positioning themselves now are writing the rules for the next decade of technological competition. They're determining who can build at scale, who can manufacture competitively, and who can deploy the technologies that will define economic and military power in the 21st century. And we're already 5 years late to this fight. While we were focused on stock market performance and quarterly earnings, Russia, China, and India were quietly securing access to the physical resources that actually matter. The question isn't whether this crisis is coming. The question is whether we will recognize it in time to mount a strategic response, or whether we'll wake up in 2027 or 2028. Wondering how we became dependent on rivals for the resources our entire economy relies upon. The math is undeniable. The timeline is clear. The strategic implications are profound. What happens next depends on whether America treats this as the resource crisis it actually is, or continues sleepwalking toward a future where we've surrendered control over our own technological destiny to nations who recognized silver's strategic importance long before we did.